Alright, so welcome to this week's roundup. Let's take a look at the price action and all that played out in the course of the week. So take this to Monday. Monday 3,245. Let's start from there. Okay, perfect. So here we go. So we have this on the 15 minutes, but as always, we'll always start. Good to start on the 4 hour, right? Typical, top-down analysis. So we go to the 4 hour here. In the 4 hour here, clearly, you can see that price is bearish. 4 hour boss. And here too. Can draw a zone out. This has been mitigated, so just leave that there. Don't have to draw the entire candle because it's already mitigated. So here we draw the entire candle out. Perfect. So now with this on our 4 hour, we clearly can see that the market has been bullish, but now we're having a sort of bearish order flow build up, and now after a break of structure, we expect a pullback, and then we expect a continuation, right? Now we also do understand. Let me just leave this at Friday. So we also do understand, of course, that this week was actually the week of FOMC. So yeah, we know that as a result of that, we're going to have some volatility, in the market, but predominantly we're expecting a pullback, and then, hopefully we get a continuation in the direction of the major trend. So with this, we can now go to the 15 minutes. So in the 15 minutes here, let's identify what we have. So here we have in the 15 minutes we have here break of structure. All right. We can also draw this out. Okay. And we do have this here. So we're doing this just to build a sort of backstory, right, on what price is doing essentially, and then we can now focus on where we're at the moment. So with that, we can draw this here, the zones. This is the last high that led to the swing break of structure in the 15 minutes. So we'll have our POI here. So you have all of these areas of places where price also will react to, so we can draw this out. Perfect. So we can draw that out too. Okay. So perfect. Now looking at this, if you were to be a swing trader, you can simply just say, okay, I don't want to stress myself. For this entire week, I'm just going to trade off the 4 hour, and I'm just going to put my entry here, put my stop around here, 20 pips or more, and then I'm just satisfied with 1 to 3. Let's say 1 to 3 thereabout, right? 1 to 3 on the 4 hour. Okay, and you just leave it like this. Okay, and then you just allow the market to do its thing. All the noise wouldn't disturb you. Go about your life. If you were a swing trader, that would be perfect for you, right? But if you're an intraday trader and then you sort of want to, catch all of the moves from Monday all the way to Friday, of course, you're not just going to enter here and leave the market. You hopefully want to sort of catch every single, trade that plays out on the lower time frame. So for us, we're not trading all the 4 hour for now, so we're just going to go to the 15 minutes to catch all of those opportunities that will play out on the 15 minutes. So let's look at what we have here. Number one, so here you can see that after this break of structure, price raised the low here, we're sort of having a change of character to the upside. So we have a change of character in the 15 minutes, but then we also do know that at any point in time, price can continue downwards, right? And what I mean by that is this: the swing structure based on what we have here is clearly bearish. So even though we have a sort of build up in terms of the bullish order flow, we know that the major trend itself is bearish, right? So if you're trying to catch that bullish trend, you have to be super conservative in your thinking or in your whatever, because the market can completely just flip at any point in time and continue downwards. Okay, so that is something to bear in mind. So coming into the market on Monday, this is 2:30 a.m. Let's take this to 7:15 around this time. So I remember posting this on the group, and by the way, this is also an opportunity for me to let you know, if you just come in the channel, of course subscribe. If you haven't subscribed, hit the subscribe button. Okay, it just helps to promote the channel and let other people see these things, right? And of course, it just helps to sort of, deepen whatever it is I'm putting out there for everyone. So I posted this on the channel. Let me just collapse this. I posted this on the channel, the forecast, for Monday. So you can see here, basically every day of the week, I post the forecast. So you're able to see the forecast and also how it turns out. So it's not just we're just going through price after price is printed out, in the market. No, we forecast price, and then by the end of the day, we have the roundup, and you're able to compare what I forecasted and also what played out eventually. So it's not just a bunch of going through price after it's done in the market. No, you get all of that in the program. So hey, it's an opportunity for you also to join the Stock in Profit program. If you haven't used Stock in Profit, and you get 10% off. Okay, so that said, let's continue. So here we have this. So you can see here, like I mentioned, this is 715. I would be super conservative, or super, will I say, I wouldn't just want to go long here. Okay, and I'm going to show you what I mean by that. So here we have this. So this is the lowest candle here that gave us that. So we can draw this out like this. Okay, or we can even draw this out, because this candle here, or this low here, hasn't really done anything, so we can't really rely on it. So if you wanted to go long, this is a good area for you to say, okay, I'm gonna go long because I can see here that there's a sort of build, a change of character. I want to just go long. But the one thing you have to have in mind is that this is going to be a risk entry. And what I mean by that is you just have one change of character. You don't really have the build-up that has shown you the price really wants to reverse. And also the swing structure is actually bearish. So if you're trading this, you're actually going against the trend, right? So you have to, that's something you just have to, you need to have in mind, okay, that you're actually not trading a high probability setup, and this is likely not going to go in your direction. Okay, so but if you were to enter into risk it, a risk entry is going to look like this. If price comes here, then hopefully it targets that, but you have to be super conservative because price is heavily bearish, and at any point in time price can continue to go downwards. But let's see how this played out. So this is 8.5, and clearly you can see here price has arrived at our target, and then we don't have an entry. Of course, price did not return to give us an entry, right? So we can just take this and then just move this. So with this now, we have this candle here. Price is here to close by the body, so let me just leave this here temporarily. So this entry is invalid simply because price did not return to targets in before arriving at our target. So we can just take this forward. Okay, perfect. So price is really pushing to the upside, and that is essentially it. Now this is New York session. So what are we expecting during New York session? The only area here where we're expecting to sell, or we're anticipating some sell, is if price should come around here, right? So we're not anticipating to sell anywhere here, and also I'm not expecting to go long here because this is against the major trend. So we may decide to say, oh, you want to go long here, but you have to bear in mind that, hey, this is a counter trend setup, right? The market is just pulling back, and at any point in time the market can just continue to go downwards, right? So your expectations has to be really conservative. Okay, so with that said, let's just play this. So New York session, so you can see here now price essentially is selling off massively. Okay, and there's a bearish change of character. However, this low is yet to be taken, so it's when this low eventually gets taken that we can now say officially the market is now bearish. So with this, we can just play this out. So now clearly you can see that low went, and that's why I wouldn't want to go long there, because that is not the major trend of the market. So here we now have a bearish order flow, so this is confirmed to us that price is now willing to continue in the direction of major trend. So here we draw that out. All right, clearly we can also draw this out here, right? So if at all price gives a pullback, okay, hopefully we get that and we sell off if we get that pullback. So here you can just target out 1 to 3. This is what time, this is already 5. Oh no, so we wouldn't be looking for an opportunity because it's already past 5. So that's it. So this was how Monday went, and there was no trade, for us. And I also posted this in the in the forecast. So I think, let's see the roundup. Where's the roundup for Monday? I think Monday was the 18th, Yeah, so you can see, like I told you, exactly what I did. This was my entry. Price did not give me an entry, and eventually price, reverse. So this is something, the forecast is there, at the end of the day, I share all of these things. So that is that. So that was the end for Monday. So Tuesday, let's take this to 6:45 a.m. Ooh, 7:30. Okay, so this is it. So this is now Tuesday. So we're still going to draw this out and also draw this out. The market is still what? It's still bearish. We know that. Now we can take the swing low. So essentially we now have a new swing structure. So I'm going to take this guy out. I'm going to take this guy out just so you can have that clarity. So here you can see we have the swing high here. Okay, and then we have this is of course on the 50 minutes, right? Yeah, we've already established on the 4 hour the market is bearish, and that's that. Okay, so here we have this. So if I draw this out here like this, so you can see here we have this break of structure. This eventually now gives us continuation break of structure. So this eventually now gives us this area has a supply zone. Okay, so but we do know that based on the structure, excuse me, one thing. that I did take the trade, and you can see here risking just about 2,000, made about 6,000 out of that particular trade. So that was it. So let's see here. Why is this hanging? Just a sec. So anyways, whilst we're trying to figure this out, just to show you that following market structure and following the stock in profit way of trading is actually straightforward and simple, straight to the point if you know what you're doing, no complications, and you're good to go. So this is a good place to say, if you haven't subscribed and you've listened all the way here, please hit the subscribe button, okay? And also share, leave a comment, and let me just know what you think about everything that I'm doing here. If you like it, then that also serves as an encouragement for me to continue to share more knowledge with you right here. And of course, if you want to join the program itself, you have access to the course, you'd have access to the trading floor. So essentially, you're going to be seeing all of the setups that I actually share, the forecast. I don't consider it a signal because it's just a forecast, but you can eventually learn from me because you can compare the forecast and also the roundup at the end of the day. Okay, so that said, that was how that trade played out. So you can see clearly my entry was quite below that area because the target of 1 to 3 was hit well ahead of the news. So yeah, I was in the market during, of course, FOMC. So that was it. So FOMC played out, and there was nothing, okay, for me to do until the next day. So let's just take this to Thursday morning. So let's go to Thursday 6. Okay, 7. Perfect. So here we go. So this was it on Thursday. So here we had this high. Okay, and we had here this low. Okay, and I can show you that based on this was exactly what I shared also in the forecast. So here, if I go to the forecast for when now, for Thursday was the 21st, I think. So here you can see I had basically, so this was it. So you can see I had marked this, so the same thing we're looking at, and I had said that if price should take out this high, then we may consider long, but that is actually low probability, and I'll tell you why. Because you can see the price is already heading towards this area. And by the way, if we draw this out, you can see the price had already tapped into that 15 minutes POI, right? So the likelihood of price really pushing into this area was super low. Okay, so but what we're interested in is because we know that after FOMC, let me just take this out because price violated all of this. After FOMC, after all of this bullish run, we're definitely gonna have a recovery. Okay, so we're just interested in seeing this low go, and then that will just tell us that, hey, now it's time to shoot, you know, for the swing low. So price did this thing, and then eventually, look at this, eventually this happened and price, you know, took out the previous low. So that was enough for us to now say, okay, our stop loss above this area. Okay, and then we can now target, you know, our 1 to 3 standard. Okay, no greed, just being patient with price. So let's see what price did. Exactly, so this is what price did. Price did not give us an entry here, but that was also perfect. So we now have a new zone, had now, right, in hindsight. So we had this new zone that was created, and with that we have here, you can see price gapped. This was actually flash news, I think, that came out, something of that nature. Yeah, so we had a gap here, and then price, you know, was sort of recovering. But our expectation was that if price at all returns all the way here, this is going to be a nice entry for us, except a new structure is formed, which actually did happen. So let's see how this played out. So you can see this is 12 noon. Now we're coming into New York session. So perfect. So now coming into New York session, you can see here that price now pulled back all the way, filled this gap, and then gave us a change of character. I hope you can see this, right? Yeah, so it gave us change of character, and for me, whilst there was a pending trade here, but this change of character was enough to say, okay, now we may consider this area and go short from here. Okay, if price does give us you know, what we need. So after this candle took out that low, so this had our stop above this area like this, and then we have our 1 to 3 again, as always, standard. Okay, and that was essentially that. So with this, we had that, and then eventually price did this thing, and that was it. 1 to 3, money in the bank. Okay, and that was it. So price respected that and now created a new bearish order flow again for us, and new internal bearish eyeballs, right? So with that, now we have this, okay, and this is already 315. So if price were to return, then we'll short again, but then you can see clearly price was heavily bearish, so there's no need fighting the market. It's 5 p.m. and that's the end of trading for us for the day. So we take it to Friday. And guys, this is just a simple stock and profit strategy, nothing complicated here, just following a simple strategy if you know what you're doing, of course, right? Okay, so here we have this low, bear shadow flow, perfect. And then we have here, this is likely area for price to react to. And then also this pullback here was also a nice area. It's a nice area for price to also react. So we drew that out. So this is now 6:45 a.m. Whilst it's possible to say, okay, now after this major break of structure to the downside, price may decide to pull back all the way up, and that's great, right? But you also have to always remember that trading in directional major trend would actually cause you to catch more high probability trades, okay, and this will be low probability if you want to trade a counter trend, okay? So that is something to have in mind. So with this, now we just stay humble, and you can see clearly price, if you had entered, price would have swept you, and that is it, guys. Knowing when to trade and when to stay off would also help you to avoid unnecessary losses in the market. Okay, so here we go. So we have now this new zone that has been created. We still know that price may decide to violate this supply zone and pull all the way back here, but because we can see that clearly the market is heavily bearish, and you can see that after the market sells off, the market is not really pulling back all the way back to the extreme supply. So we can, based on that understanding of the market, also based on understanding of price and experience, go short here, because we know that the market may not necessarily pull back all the way here because the market is heavily bearish. Okay, so that said, enough of my explanations. So have an entry here. If this entry fails, then we can look for another one. So again, we target our 1, 2, 3, right? Perfect. So we target our 1, 2, 3. So here we can now go, and that was it. Got an entry there, and which played out. Okay, so this is going past New York, London session, coming into New York session, and that was that. So of course we wouldn't stack our trades because we want one trade to play out first before we can, we enter another trade. So holding the line there, and then eventually, let's see, okay, end of day, and eventually price arrived at our destination. Okay, you can see that. Okay, and that was it. So guys, so that's it, right? So you can see how everything played out. Of course, this is a calendar on how all the the red folder news rather that came out in the course of the week, and that is that. So now we have all of this has the trades that actually played out and the trades we actually did take in the course of the week. So now with that in mind, this did not play out, so we can take this out. So let's do a calculation of the trades that played out. So this is week what? Week 12. I think I'm correct. Week 12. What's the date? Let's see. The date will be week 12 from the 18th to 22nd. 18th to 22nd March 2024. Okay, so that's that. So Monday, no trade. Tuesday, no trade. Excuse me. Tuesday, no trade. Wednesday, what do we have? So Wednesday we had this +3, 2 trades actually. Patience, guys. Patience plays major role in your success in trading. And then on Thursday we had here, this trade did not work out, so then we had this one on Thursday, New York session, +3 RR, and then on Friday we had just one here and this guy, so +3 RR, right? And that is it. So with this now, we can look at this and say total RR. So we have here 1, 2, 3, 4. 4, right? So 4 times that, that's about 12. 12 RR plus. Okay. So if you're risking 1%, that's plus 12%. By all standards, that's a massive return. So 6% if you're risking just 0.5% per trade, right, on your account, and whatever percentage, you can do the maths yourself. But this gives you an idea of, what happened, right? So essentially our wins, we had how many wins? 1, 2, 3, 4. So we had 4 wins, and then losses, we had how many losses? 0. Okay, so it was 100. The win rate essentially was 100%. Amazing stuff. Well, good week. So that is that, guys. So this essentially is the picture of how the week went on. Now, of course, there would have been some losses if we had taken some of the counter trend trades, like I highlighted earlier, and one of them would have been, around this area. If we wanted to just trade the counter trend, we would have taken a loss here. Also, I think we had another one too, and that should have been, yes, here too, because you can see here they're also bullish. Change of character. If we also wanted to take the counter trend, would have taken a loss here, would have been 2 losses. So you see here that understanding the high time frame bias of the market, that the market was bearish, will save you a lot of issues, a lot of times, from taking unnecessary losses that just sort of demoralizes you, and also affects your psychology if you're not careful. So but patience and just trading in direction of the major trend would help you to avoid those type of losses. So essentially this is it, guys, and I hope you've taken a thing or two from this. So I look forward to sharing with you in the program. If you choose to join the Stock in Profit program, use the Stock in Profit code during checkout to get about 10% off. And yeah, enjoy, like, subscribe, share, and leave a comment. Let me know what you think. So it's been a pleasure, and see you next time. Bye bye. Cheers.